of investing? What are some strategies that you can utilize to not be as reactive when you see fluctuations within the market? I'm going to talk about all of that in today's episode. If you all can do me a huge favor, if you could please like, subscribe, share this video. Don't forget to hit that notification bell below so you can be notified every week when I drop content. Now, when looking at women compared to men when it comes to trading, it really gives you an indicator of how emotions plays a role when it comes to investing. And women actually tend to be better traders than men because they tend to be more disciplined, more cautious, they tend to take less risk, and they're just more patient. And in fact, I read a couple of statistics online that has showed that women tend to have smaller portfolios than men, typically about 34% less. Also, according to a 2021 Fidelity Investment study, it actually showed that women tend to generate higher returns than men, typically about 40% more. And also Vanguard did a study back in the first quarter of 2020 where it showed that even though women weren't trading as much, they tend to see better results when it came to investing. And also, when you look at the comparison between women and men with trading, women tend to be more short-term traders, so they tend to hold their shares a little bit longer, whereas when it comes to men, they tend to be more day traders, so they're constantly making decisions, they're in and out of positions. Women, they tend to utilize bigger stop losses, so they're putting their stop losses at a certain parameter and they're not swaying with their decisions. Men, we tend to want to change our decisions when it comes to our stop losses. I know I'm victim of it. I'll have a stop loss at $50 and then I'll change it to $48 the next day. So that really gives you an idea of how emotions plays a role when it comes to investing in the market, and really how women and men compare when it comes to how they think when different things are happening in the market. So how can you take your emotions out of investing? Well, the very first thing that you have to do is you have to make fewer decisions. You want to keep investing as simple as possible. You don't want to make it complicated, and the best way to keep it as simple as possible is you want to choose your investments. You want to add to them consistently, either on a daily, a weekly, a monthly basis. You want to implement more of a dollar cost averaging strategy. So no matter if we're in a down market, if we're in an up market, whatever the media is saying, or whatever is going on with the price of that stock or cryptocurrency, you're constantly investing nonstop no matter what's going on. And I think that this is the mentality that you want to have, because you want to make as less decisions as possible. And if you can kind of automate the process and not have to think about day to day, I have to sell this position, I have to buy this at that price, it makes the situation just so much easier for you. And then also when it comes to making fewer decisions, you maybe want to only rebalance your portfolio once or twice throughout the year, and that's just simply changing your allocations to make sure that they fit your desired asset allocation. So if you say that you want 80% in stocks and 20% in bonds, you're making sure throughout the year that it reflects that with your asset allocation. The next thing that's very important is you want to stick to your financial plan. Stick to your investment strategy. Don't change it. Understand what your time horizon is. Understand your risk tolerance, how much risk you're willing to want to put into the market, how long that you actually going to have those investments working for you in the market, and understand your ideal asset allocation. That's going to be vitally important to make sure that you have the plan written out and you're not deviating from it. The third thing that you want to do is you have to document your research process. So what I mean by that is, how do you make your decisions on what makes a position investable? So are you going to invest in the stock if they have high profit margins and lower debt? Are you one that want to invest in a company that has multiple product lines and that has a great price to earnings ratio? These are questions that you want to ask yourself, and then you want to actually write that down so that way you know, okay, if this checks off on my criteria, I'm going to invest in this company. If it doesn't check off on my criteria, I'm going to completely move on to the next company. That is the strategy. That's the way you want to think about it. And these aspects are going to help you guide your investment decisions so that way you're not thinking off of emotion, but rather you're thinking from your detailed process that you actually have written out. It's essentially your blueprint. Now, the next thing that you want to also pay attention to is understand your own expectations. So if you say you're a person that you want to have an aggressive growth strategy, you want to invest in the market and average a 7% annual return, typically that tends to be the annual return within the stock market when you look at, for example, the S&P 500. If you're going to stick with that strategy, understand your expectations and know that it is going to be volatile. You're going to have some downward years like we've seen this year, and you're going to have some great years that are going to far surpass those down years. If you're a person that wants more conservative strategy and you want only a small amount of turn in the market, then you may be a person that's going to invest maybe in bonds or things that are more stable. Understand your expectations so you know how you want to invest in the market. That way you have a better understanding of, okay, these are my expectations. I know what to expect if the market goes up and down, and it helps deal with your emotions so that way you're not going to be reactive. If a stock, or your portfolio is down 10% throughout the year, you're just going to stick to your strategy and know that this is what I put in place and I have to execute with it. Now, the last thing that you want to do is you want to fail fast and you want to fail often. Oftentimes throughout our society, we think that failing is bad. When you make a mistake, that's not a good thing. Well, when you fail and when you make a mistake, there's actually a lesson in that opportunity. There is an opportunity in the failure. And if you approach it like that and you continue to get back up and you keep working on, how can I improve my investment strategy? How can I find a stock that has great balance sheet, great cash flow, that is a company that's going to grow over time? How can I diversify my portfolio so I can be more bulletproof if we are in a recession or if we're dealing with volatility within our market? This is smart to keep this mindset to know that we're going to make mistakes, especially when it comes to investing in the market, especially with trading. You could miss your price target, you could misprice your stop loss, you could get in at a bad price and the stock can just completely do the complete opposite. You can invest in cryptocurrency, not understanding technology, and realize that that wasn't the best investment. So I think above all else, when you fail, understand what the lesson was in it, understanding why you failed, what went wrong, what went right, and then you just kind of re-coordinate and you make the adjustments. And that's just part of life. Life has its ups and downs. It's about making those adjustments, staying positive, keeping perspective, and not giving up. Because if you don't give up, you always will win. But if you give up, then that truly is the failure. So I thank you all so much for watching this video. As always, if you can continue to like, subscribe, share, continue to share this channel and this information with your circle. And don't forget to hit that notification bell below so you can be notified every week when I drop content. And I thank you all so much for watching this video, and take care.